Hello, this is Christina Keenan from the Federal Home Loan Bank of Dallas's Member Solutions team. Welcome to the FHLB Dallas webinar presentation on fixed rate FHLB Dallas owns the option or fixed rate photo advances, also known as puttable advances. Please take a moment to read the disclaimer. Our agenda today will cover the following: a description of photo advance characteristics, as well as a discussion about the option sold by the member to FHLB Dallas and an example product structure, the benefit of photo advances, which is a rate reduction, an overview of the market environment, potential risks that members should consider before transacting in photo advances, and resources for additional information. Let's start by discussing some of the basics of fixed-rate photo advances. They are fixed-rate, non-amortizing, are available the same day, are transacted through your DDA, and are prepayable for a fee at any time with at least 24 hours notification to FHLB Dallas. Maturities range from 2 to 10 years with various lockouts. The minimum transaction size for a photo advance is $5 million. Importantly, the member's total portfolio of photo advances cannot exceed 33% of a member's total advances outstanding immediately following execution. Fixed-rate photo advances. Fixed-rate photo advance rates are lower than the rates on like maturity, fixed-rate, fixed-term, or bullet advances with no embedded options. A member sells to FHLB Dallas via a reduced interest rate on the advance, options to terminate the photo advance. What are the general terms of the options? The member is selling FHLB Dallas the option to terminate the fixed rate photo advance at a specified point in time, known as an option exercise date, prior to the stated maturity date. In exchange, the rate for a fixed rate photo advance is typically lower than a like maturity bullet advance. Here is an example photo advance with a 2-year term and a 6-month lockout period. This advance has a Bermudan structure, meaning that FHLB Dallas has quarterly options to terminate the photo advance prior to maturity. The light blue shaded area represents the lockout period, during which FHLB Dallas cannot terminate or put the photo advance. After the 6-month lockout period in this example, FHLB Dallas has quarterly options to terminate or put the photo advance. These option exercise dates are represented by the orange triangles and are predetermined before the photo advance execution. If FHLB Dallas were to choose to put or terminate the photo advance at one of these predetermined option exercise dates, there is no prepayment fee and replacement funding will be available at then prevailing market rates subject to FHLB's credit and collateral requirements. Let's look at this example process flow step by step. A member takes a photo advance with a defined advance rate, lockout period, and final maturity date. Again, the photo advance rate is lower cost than a like maturity bullet advance. The member enjoys the comparatively lower cost funding during the lockout period, again designated by the blue shaded area, and then the lockout period ends. At the option exercise date, designated by the orange decision point, FHLB may choose to exercise its option to terminate the photo advance. If FHLB does not terminate the photo advance, the member continues to have the photo advance rate for another 3 months. After that 3-month period, if the advance maturity is not yet reached, there is another option exercise date where FHLB may choose to exercise its option to terminate the advance. But if after that 3-month period the photo advance maturity has been reached, the member pays the advance principal and interest transacted through the member's DDA. What if FHLB does exercise its option and FHLB terminates the photo advance prior to maturity? The member may choose to replace the photo advance with an advance, overnight or term, at the then prevailing market rate. If the member does not choose to replace the advance is paid down. Falling and rising rate scenarios may provide both advantages and disadvantages to members. If rates decline, an advantage is that funding usually does not have to be replaced as the photo advance duration extends potentially to the final maturity of the advance. However, the photo advance could be comparatively more expensive relative to then prevailing market rates. Additionally, prepayment fees will generally rise. Another disadvantage is that while the advance duration extends, the duration of some assets like mortgages may shorten. What if rates rise? An advantage is that members potentially enjoy comparatively lower cost funding in a higher interest rate environment until FHLB exercises its option to terminate the advance. However, the inexpensive funding may not last until the maturity date, as it is likely to be terminated by FHLB at the next option exercise date. Another disadvantage is that while the advance duration shortens, the duration of some assets like mortgages may extend as prepayments slow. Let's circle back to a key component of photo advances, the potential cost savings. The rate on fixed-rate photo advances is below the rate on a like maturity bullet advance. Let's look at some example indications. The interest rate on a one-year bullet advance is 1.16%. The interest rate on a 5-year bullet advance is 2.27%. The interest rate on a photo advance with a 5-year term and a 1-year lockout is 1.05%. We've again shown the 1-year lockout period as the shaded blue area and the quarterly option exercise dates as the orange triangles. At each of these option exercise dates, FHLB Dallas may terminate this photo advance, meaning that the photo advance may only last for as long as the 1-year lockout period, or it could extend to the full 5-year term. We've seen that fixed-rate photo advances are lower cost than like maturity bullet advances. Why is there a pricing advantage associated with photo advances? The pricing advantage is compensation for risk. The member gets a lower interest rate for the fixed-rate photo advance as a trade-off for giving FHLB Dallas the flexibility of choosing an advance termination date that is potentially earlier than the maturity date. The flexibility that the member gives to FHLB is very similar in principle to the flexibility that a mortgage lender gives a fixed-rate mortgage borrower to terminate the mortgage at the borrower's choosing. Another analogy for the advantage of the interest rate reduction is an insurance premium. For example, an automobile insurance firm collects a premium as compensation for taking on the risk of potentially having to pay on the auto insurance policyholder's claim. Similarly, the member collects a premium in the form of an interest rate reduction for taking on the uncertainty associated with the termination date of a photo advance. The member uses the premium to buy down the rate. A potential risk, the number of options sold to FHLB. Here we see two example photo advance structures, one with a 2-year term and a 6-month lockout, and the other with a 2-year term and a 1-year lockout. In the first structure, the lockout is shorter and there are 6 quarterly option exercise dates where FHLB may terminate the advance. In the second structure, the lockout is longer and there are 4 quarterly option exercise dates where FHLB may terminate the advance. The first structure provides a greater pricing advantage. There is a larger rate reduction because the member has sold to FHLB more options and is potentially taking on more risk. The size of the rate reduction of a photo advance is compensation to the member for taking on more risk. The size of the rate reduction relative to a like maturity bullet advance may increase with the number of options sold, a longer maturity period, a shorter lockout period, a higher frequency of option exercise opportunities, or higher implied volatility in the rate markets. If market rates and implied volatility remain relatively stable, photo advances may lower your cost of funds. The market environment. What has been observed recently in the market? The yield curve has flattened. Here we see the current Treasury yield curve as well as the curve 1 year ago and 5 years ago. The short end of the curve has come up, consistent with the rise in short-term rates and the Fed hikes the past 2 Decembers. The long end of the curve has risen to a lesser extent. This curve flattening has also been observed in the FHLB Dallas advance curve, with the short end of the curve rising more than the long end has risen. Looking at implied market volatility, specifically the Merrill Option Volatility Estimate or MOVE Index, recently implied market volatility has been below its 10-year average. Photo advances may provide the greatest benefit to your institution when market rates are and are expected to remain relatively stable. What happens if this isn't the case? What does the impact of rate movements potentially look like in terms of the market value of the photo advance? Here we see the curve reflecting the market values of a photo advance based on the direction and magnitude of rate movements. In the declining rate scenarios, the member loses value. The photo advance duration extends and the cost to prepay rises as the market value of the photo advance increases in the favor of FHLB and not in the favor of the member. In the rising rate scenarios, the market value of the photo advance declines, favoring the member and not favoring FHLB. The member generally enjoys this value, comparatively lower cost funding than then prevailing market rates, for only a limited period of time, usually ending on the sooner of the end of the lockout period, the next option exercise date where FHLB can terminate the photo advance, or the maturity date. We now see the effects of the same shock scenarios on different photo advance structures. Photo advance rate indications, as well as indications for like maturity bullet advances with no embedded options, can be seen here. Please note that actual photo advance rates are dependent on market conditions and are subject to change from those seen here. More detailed product information can be found in the Advances Product Guide, in the Fixed Rate Photo Advance White Paper, and in the Member Products and Credit Policy documents on FHLB.com. If photo advances are a fit for your institution's financial strategy, next steps are to complete the Photo Advance Request for Quote and the Photo Advance Agreement. To complete next steps, or for additional information, please contact your Member Sales Relationship Manager or the Member Services Desk at 844-FHL Bank or 844-345-2265. Thank you for your time. We look forward to future product and strategy webinars with you.